Warren Buffett made billions betting on value. Today's investors, they're betting like it's Vegas. Welcome to the era where investing isn't about fundamentals, it's about FOMO, hype, and meme coins. Now, unfortunately, the great Warren Buffett has recently decided to hang his hat when it comes to managing an investment portfolio. He recently retired from Berkshire Hathaway, and he laid the groundwork for everyone out there to go and build wealth. He really did. And still to this day, all of his quotes and talks and conferences, it's all still relevant. However, unfortunately, we've lost focus on that. We've built all these crazy technologies, whether it's apps or whether it's instruments out there that do not follow the Warren Buffett standard. Now, we all fall into these traps where we see the hype and we want to follow footsteps in that. You know, we want to FOMO in, we get excited, but that is the problem. We need to stop doing that when it comes to investing our hard-earned money. All right, there's too many temptations out there. There's the meme coins that go up, 5,000, 6,000%. You've got the hot call options of the day when it comes to apps like Robinhood or Webull or whatever. You've got the free trading. That's made it more of a gambling space at the end of the day. Free trading just means everyone can get involved and make dumb decisions when it comes to investing in the stock market and investing in companies. And half the time, all this free trading does, it makes it like a casino. It makes it like Las Vegas. All right. People out there aren't spending their time learning about the fundamentals of a company, learning about the growth trajectories of a company, listening to conference calls, et cetera, et cetera. Now they have the ability to do that, no doubt, but unfortunately, people aren't taking advantage of that. They're taking advantage of, meme coins and covered call ETFs and call options, put options, et cetera, levered instruments. None of these things Warren Buffett ever messed with. Crypto, levered instruments, et cetera. Now, some could say the end of the era for Warren Buffett could have been around maybe 1976 when the Vanguard 500 index fund was created. Some could say that was the end of the era where passive investing got it started and you didn't have to really look into the intrinsic value of a company. You could just invest passively and you could definitely build wealth. You could build easily $1 million if you, save 6% in your 401k. That is still possible today, but you could still invest in value even on an index fund or an ETF for that matter. For example, in 2008, you could have been buying the dip on the SPY or the Vanguard 500 because you understood the intrinsic value of the S&P 500 when it went down 50%. That was an easy call. That was a Warren Buffett call right there that you would have made at the bottom of 2008, 2009. So, in a sense, we still had the Warren Buffett era when we had index funds and ETFs. However, this all changed when Robinhood came out. Robinhood changed the game from value investing to the casino. That's what Robinhood did. They offered free trading from the start. They made an app, the most sexiest thing you've ever seen, the easiest thing you've ever seen, and it changed the game dramatically. Young investors, they left the Warren Buffett era and they went with the casino era, the hype era, the meme coin era, where people were making, thousands and tens of thousands of percent, hearing it on YouTube, hearing it on Reddit, hearing it on TikTok, whatever it is, and chasing it on Robinhood, placing trades, day after day, month over month, not even investigating what the company does or what the fundamentals are or what the growth trajectories are. That is what's happened today, unfortunately. But Here's the beautiful part, is that there are outliers out there. There are going to be outliers who actually care about the fundamentals and who actually want to invest just like Warren Buffett did. All right? They read and they study that man left and right. And what do? They go and they find the intrinsic value in a company, and they find that difference where there's a gap in valuation, where they know that the company is valued here and the market's valuing it lower. And that gap is where true wealth is made. And those outliers are going to outperform the gamblers every day, month over month, year over year, and they're going to compound their wealth just like Warren Buffett did. They're going to go long and strong, and every year they're going to compound. And the people who are in the casino, who are, doing the covered call ETFs or doing the options trading on a daily basis or just day trading, whatever it is, they're going to lose out. You will lose your money if you play in the casino. That is how the stock market works. Wall Street knows it. They know how many people are piling into these, covered call ETFs, these 3x levered ETFs, whatever it is. They know exactly what they're doing, and they're going to dump. They're going to dump the system to get you out. All right, they're going to make you lose. That's how the game works, and they're going to reward the investors like Warren Buffett who understand the value. They don't even care about the intrinsic value because they have the algorithms to beat you. That's how it works. Wall Street works that way. They trade on algorithms and they built the system. They are the casino, guys. The algorithms are the casino that's going to, margin call you out. That is the way it works. Okay? So I recommend that you consider everything Warren Buffett has taught us. He's taught us to look for value, all right, in a company. Look for that intrinsic value and look for an opportunity where the market's not valuing it properly. There's always inefficiencies in markets, and you can find those opportunities. We've seen it recently. We saw it with Tesla in 2019. There was value there. We saw it with Nvidia in 2023, was it? Where it was trading at like $100, and it 10x'd from there because people who were holding that stock, who were long Nvidia, they understood that there's this AI play. They knew what was coming. They saw the intrinsic value just like Warren Buffett did. Now, Warren Buffett, he's not a tech guy. He didn't necessarily understand where the intrinsic value is on these tech companies. But there are many people out there who do, and they are the outliers. And they're holding strong. They're not selling Nvidia. They're not selling Tesla. They're not selling AMD. They're not selling any of these top companies, the Mag 7. They're not playing games. Just like Warren Buffett did with Apple. He held that stock for years. So I think we're at the end of the era, unfortunately, and there's going to be just a small niche number of outlier investors who take advantage of value, who understand what value is and become wealthy. Year over year, decade over decade, they're going to compound their wealth because they're going to go long and strong. While everybody else is at the casino adding liquidity to the market where the fundamental investors, the value investors, are going to win every time. Because every time they do that, the casino takes in all the money and they continue to add to the stock market. And the valuations go up and up and up while everyone loses out at the casino. So, I wish Warren Buffett the best. He's taught us a lot of great things. And guys, just keep reiterating all of his concepts and you will become wealthy over a 20, 30, 40-year period. Okay? So hopefully you guys like this kind of content. Like and subscribe if you do. And if you guys could, please take a look at my previous video. And everyone, have a great day. Thanks. Bye.